Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 2nd, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave 1 is done, working on a wave 2 correction. Once it's over, we're going to go blasting off and go ripping up over the next few years toward a target of 130 to 140. But in the interim, is this new low here in place? And we are going to go breaking out, or we still need to break down some more. At this point, it's still an unknown entity. We've just been chopping for months now. As you can see, for almost a year now, we've just been chopping in this zone down here, not breaking out, not really breaking down, making slight lower lows. And I guess you could say we made a slight higher high there, but we're just kind of in that same zone. But is it a high probability that this is over? Not at this point. When does that flip and say it's a high probability we are breaking out? We got to get up above this area around that 105 to 108 zone. We break out of that, then yes, extremely high probability this low would be in place, and then we would go breaking out. Now, jumping into the charting platform, we could see exactly what we've been discussing for the last several weeks. We're stuck between a bigger resistance zone and a support zone. And even the last week or so, we stuck between a kind of condensed version of this resistance zone and a support zone. So what are these levels? These levels represent the 618,786 retracement zone. So if you take that swing point low, you go up to this swing point high, or right at that 618,786 is this support zone. And then, of course, from the recent high to the low, which even if these are about the same, I guess this one is slightly lower. You move that over there, then you have your 618,786 zone toward the upside. So this is why this is not a given that we're definitely breaking out. I'll draw a fresh Fibonacci here so you can see them over here. From that high down to this low, let's see who's lower. This low went down to 9763.2. And this went to 9762. So this is the lower low. There is a little trick. You can hold your control key down and it'll tell you the magnet on the low, and you click there and it automatically gives you that low. So when we look at this, notice where we're bogging down. That's why this pink box. You got your 618 resistance and your 786 zone, and that is this pink box right there, right in that zone. So we can't break out, we can't break down, we're just going to chop sideways. And that's more or less the conclusion we came to for the last week or so, that we said as long as we stay below the resistance and support, we're stuck, we're likely to go sideways. So I would not expect too much more anything else. If we do start breaking out above this zone, then we'll look for that target above. So I'm going to compress this so you can see what that looks like. If we get above this 618 area, and we just not a little poke up here, but actually close above this little zone here, then the probability we go to 101, 101.50 becomes 75%, 70+%. These would be high probability targets. But as long as we're below this resistance zone This is not on the table yet. And as long as we stay above this little support zone, then the likelihood we break the support zone, then the likelihood we go visit 97.30, 97, maybe 96.50 down here becomes very high probability. But what if we did that, William Bruce? What if we actually falter, we close below here, we reach these extensions, which would be pretty high probabilities, yes. Once we go below this, high probability. Once we go above that, high probability. But in the interim, even if we did this to the downside, where would that leave us? You have to focus and zoom back out and go, well, from the prior low, which is where that wave 2 potentially could be, but not necessarily, right? That it's over. But from this low to that current high, that is the 618786, that even if we break this, we go down here, we're still in that same support zone. So bigger picture, back this out, that we break resistance, we go up here, we break support, we go down here. And I'm still leaning more to the downside than the upside at this point because of a big reason. Go out to your weekly chart, come back to where we had a COVID low over here, and you look at this COVID low run up. All of this correction we've been talking about since almost 4 years ago. Hey, dollars index is due for a big correction, and it's going to last years to do this correction, but we're not looking necessarily for the dollar to break any new lows. And again, that's even off this monthly chart. You need to come all the way back to this low back in 2008, end of 2007, early 2008. From that low to that high, that's that wave 2 retracement we're looking for. Do we get a 618 out of that? That's 87, and around 87 and change. Or do we go deeper toward that 786, toward that 80 zone? This is where I originally expected. Back here, when the dollar made that rip and we topped out 4 years ago, I kind of made a statement that we were likely going to get a wave 2 correction. And typically after this type of move, you get a little bit deeper retracement. That's why we're talking like a 618/786. So this was the original target zone. Are we going to get that low before we go breaking out to our 130, 140 target? Or do we start breaking out now, and that dip we got now is the end and we break out? Well, just remember this picture. At some point, this wave 2 will end, and we're definitely going to go breaking out. Or do we go lower, and then we go breaking out? Well, somewhere between this low down near that 786 and the current low, which we're in between the 38.5, 38.2 retracement and half, 50% retracement, that's where we are currently as a low. But is that done? Typically, I was looking for a little bit deeper retracement before we're done. And why do I still hold on to that? Well, from this prior low here for COVID up to the high, we took that 618 out, which says we have a 75% chance we're going to go visit extension at the lower low, which puts us right around that 85, 82 zone. Let me show you what that looks like on the charting platform, which is very interesting. So off of this low to that high, we got that retracement. We took the 6-1, this right here. We did not reach the 87% that I'm looking for yet. But as you zoom in and you go off the COVID low, right? 2 different lows here, 2 different time frames. 2008 at that 70 range, and then over here 2021 in this area where we did for COVID low, and then we went up. But this initial move up, which was substantial, in this retracement, this is what we were looking for. We're between the 618 and the 786 zone, right? So I knew we were going to get a 618, 786 zone, but is it going to end up being off of this low and we go breaking out, or we're going to go further to reach this extension down here, which would bring that 618, 786 zone off of this low over here back in 2008. Notice where the 8750 is? Right around this extension zone. So we'd make at least a 618/786 type of retracement where we originally talked about 4+ years ago, or almost 4 years ago. That's why this is still an ongoing probability until it's not, right? And why do we still think, based on the chopping currently, and all you see is lines here, but all the chopping here, that we could still go lower low from this move here? That low, that high, we closed below 98.50 area, which said when we did that, we had a 75% chance that's still outstanding. We go around that 85.50 area. And about a 70% chance we push toward 82. That's the rule. The rule is you close below, not a wick, but a candle body, close below the 618 zone, then the probability of a continuation toward your extension 1448/1272 becomes high probability outcome. Well, notice, you can't see with all the lines on here, but we got candle bodies, not just wicks, on dailies, weeklies, and even a monthly. So that says we got a 75% chance we're still going to come lower. That's why when you hear me talk, well, we still think we're going lower low until we're not, then that's why these are still outstanding until they're not. How does this target down here no longer a high probability? And when does the target to the upside become a high probability as we focus on going toward 130, 140? We have to get above this big pink box. From the recent high to low, that's the 618/786 zone. See it? We get above that, you can see that 618 right there. Off of that high, this current low, we get above that, which is this pink box, then the probability we go up toward this 1448, 1272 becomes 75%, 70+%. And I'm already telling you, once we get up here, we're going to keep grinding toward that 130, 140 target. That's the bigger picture. So, high level overview. As long as we're below this big pink box here, we're likely still to go lower low. This would clean this recent move, low, high, close below the 618, would give us what we're looking for. That 618 extension failure here would give us this extension down here, 85.50, 82.25. What if we did that and we come down here? That's exactly what we were looking for off of this February 08 level, right? That's a January, February 08 level. That is a 618/786. And who are these extensions sitting right between? 618/786. That was what we were looking for to visit before we go breaking out up here. Well, all I could say is all roads, whether we dip lower, go higher, we come all the way and reach these extensions, which are still higher probability before we're done, still goes up here, or we just already made the low and we start breaking out. Once we get above this pink box, it's over. And yes, I think it's going to take months to year plus to get up here. I'm not looking for, as soon as we close above this pink box, it's over. We're going to be at 130, 140 a matter of days or weeks later. No, I do think it's going to take years. Just like when we hit that high here, we expected this correction would take years. And here it is almost 4 years since that reversal, and we're still involved in it right now. So there's no way we're going to rip and go way up here. Well, anything's possible, but the probability we go ripping and reach 130, 140 in a matter of a few months or a year is very low probability, even though this target up here is extremely high probability, right? We're going here, but I don't think it's going to take a year. I think it's going to take several years. And I'm not convinced that we finished correcting to the downside because of this recent COVID low to high, breaking that 618, still says we have a higher probability we go and visit 85. All right. So what about day-to-day current? When you stretch all this out and you go, all I see is line. Well, we use Fibonacci's in every direction, as you can see. So when we drill in so you can start to see price action in here, we're stuck. We're watching grass grow, the paint dry, stuck between minor resistance and minor support, which is stuck between stronger resistance and stronger support, which ultimately says we should go lower low, right? But in order for us to change our tune, we got to get above resistance first and then say, yeah, we're going higher high. But just because we get up here doesn't mean we can take out the big one. This is the big one. We get above this guy, it's over. Whatever the low is, if this is it, we get above this, this is the low. But until then, more probable we go lower low because of that bigger move we just showed you from the COVID low over here. We took the 618 out. Look at all this price action up in here now. Long since closed below that 618 for weeks, months. We go back, this has been months of time, like almost a year now that we've been down in this lower end. You can see over here was July of 25. We're below that 618 level. We dipped below way over here in April of 25, and we started closing below around June. So we're right around a year ago, we were closing below that 618, right? And I don't mean just a wick. You can see these candle bodies in here. So that's the key. That dictated we have a higher probability at that juncture we need to go down and visit the extension, then we're ready to reverse and go breaking out. But how does that flip? Like I just showed you a moment ago. If this is a higher probability where we still grind lower in the days, weeks, and even months to come, this thing could drag on into next year and go into 2027. Well, this is still a higher probability until it's not. When is it not? When price proves its intentions, proves otherwise. What is proven otherwise? We get above this pink box, then it sets the tone that this is the end of that correction, and we are going to go breaking out to the extensions en route to highest probability of all is this 130, 140 target. So in closing on the dollar index, be careful. Expect a lot of chopping. Even as you go to the software, come over here and check out our software. We have a daily. It's just kind of grinding with slingshot up, slingshot down, a slingshot up. This is just typical price action where we're stopped. We're stuck. From this high to that low, we're stuck at that 618 zone. From this low to that high, we're stuck at that 618 zone. So this is critical that, do we break out? Do we break down? While we're stuck between these support and resistance, what do we expect more of? More likely, we're going to get more chop, grind, and chop. The key is we got to break above that zone before we can go breaking out, or we break below support so that we can go breaking down, and we're still stuck. That's why I always show it on this charting platform. It's very interesting to see this when you zoom in and go, you're right. There's not proven anything. Look at this chop. It looks like it wants to break out. No, it can't. Look like it's going to break down. No, it's not. And the magic fibbo is holding the bottom of that area. So what's a bearish sign? First, we get a candle body close below that magic fibbo. Last time we did that, we got these closes. We went lower, made a slight lower low here. Well, I think if we start closing below here, we got support. But once we do that, we're likely going lower low. 97.30, 9700 area, right? 97.11. So this is still right in the middle of the bigger support zone. So it doesn't mean if we get down here, then it's over. No, we got to clear this hurdle to go lower low, but I'm still leaning that way because of the bigger picture. COVID low up to the high, we broke the 618. That 85, 82 is still sitting much lower than this area, but this is where you incrementally look for targets and force price to prove its intentions. Amen? And again, the software is kind of telling you we're going to get more chop. We got a daily starting to get back toward overbought, so you expect a little bit of a pullback coming in the days to come. The weekly is just kind of in the middle, no true direction. And even as we've been going up, slingshot lower, slingshot higher, turn over, slingshot up, slingshot down, it's just chop. So this looks like initial, kind of, we did this before, right? We had a big push lower. We chopped for a very long time in a wider zone. We kind of thought we were going to head fake break out. Then we chopped down and made another big move, almost not quite equality, but that move down initially, all this sideways chop and this big move down. And now we're chopping sideways. So is that kind of saying, well, we're going to kind of rinse and repeat? Did a big move down, chop sideways for a very long time, head fake, went lower low, chop sideways for a long time, up to a year now already. It's amazing we've been there about a year already, and we're chopping sideways, so we're doing one more push lower, maybe. That's why I'm leaning that way, because of that COVID low up to that high. We took the 618 out, likely going lower low over here, and that should push us down toward that target. But if price is going to prove otherwise and say, well, no, that is the end of that correction, and we're ultimately going to go breaking out, then we got to get above this prior zone up here, which is that 105, 108 zone. And what is that? Prior high to low, 618,786. And even if you look at this high to low, this 104 to 107 is the 618,786 zone. So it overlaps. I show you this on this charting platform because it's already there. All right, here's that prior move, and we'll go up and show it to you right here. This isn't the high, this is that 110 level. But if you take that high to this current low, that's it, 104.60, 107. So this is the critical zone in which we have to break above in order to warrant going visit higher highs. And then if you take in the ultimate high over here, that's where we did the reversal 4 years ago and talked about this big reversal. Look where the 618 is. It ties in with this 107 level, which is part of the 618,786 of the prior high. So this is overlapping. This is why once we get above this, it's over, my friends. We're going where? Not only 117, 119, basically 120. Then we start shooting for 126 extension. We're headed to that 130, 140 target, which again is the much bigger direction we're headed. So in closing, all roads lead to 130, 140. The question is, do we have to go lower low first? And do we go lower low to reach those extensions we talked about where we're originally called for that move down to go to before then we go breaking out? So be quick on your trades. I expect a lot of chop. It's trying to suck you in, thinking, oh, it's breaking out. And as soon as you kind of go long, it pushes short. Then as soon as you think it's breaking down, you go short and it sucks you in to go long. Well, we know until we break these zones, no trade is the best trade on this. Why do I look at this? Because if I know where the dollar index is going, I know where a lot of asset classes are going. So higher probability the dollar's likely to break down, which means those of you that trade Forex, everybody loves Forex. And if you don't trade Forex, you should. It's just as viable as any market. It's very liquid. Yeah, orders get filled without any kind of delay. It's a beautiful thing. But the euro dollar, we talked about this 4 years ago and made a bold statement. You won't hear me predict anything. Everybody predicts. My gardener predicts when the roses are going to bloom. Everybody predicts the outcome of this game, who's going to win this, boxing match, this, the weather they predict. So I leave that to the prophets. But 4 years ago, I made a bold statement saying it might not be a bad idea to go long the euro dollar because we expect the euro dollar to do a nice hearty retracement. Yes, we're going lower low. So this is a high probability target in the long term. In the short term, we still got some upside movement still unsatisfied or unfulfilled, and price hasn't proved anything to contrary, right? So we get below the support box. That's like us breaking above that pink box on the dollar index. This is the support box for the euro. We get below this, we're going 0.8, 0.7. This is extremely high probability once we get below this. This could be a fun trade when that finally happens. Just go short, look for this thing to go down thousands of pips from this 104 to 94 is 1,000 to 84 to 2,000. Maybe we go to 74 down in here. That could be 3,000 pips once we get below that. That's a nice move. Just like we said, we'd make thousands of pips on this bounce. We've done it. And I'm still looking for a little something extra before we ultimately reverse. But this was never about the euro reversing or breaking all-time highs. It's about a simple retracement, then a reversal. Well, why am I so still pushing for this to go higher? Well, remember that little scenario we talked about with the dollar index? And I said, because we broke that 618, we're likely going to extension lower low. Well, looky here at the euro dollar. We had a prior high down to this current low where we talked about the reversal. And with 618, we broke above it, that 1280 zone. We then went on later to close above the 786, which is around that 117.40 area. We're only about 100 pips from there now, but we were up here in 121 area not long ago. That's clearly above the 618 and the 786. So what does the rule say? From that high to that low, we broke above the 618, which was months, about a year ago. So we have a 75% chance we're going to 127.50. We got a 70+% chance we're basically going to 130.99, 131. That's my target zone. It's still a high probability. When is this going to become, no longer the high probability? If price breaks down below the green support zone, then we go extremely high probability. We go in extension hunting down low, 0.9, 0.8, and my target is that 0.8 to 0.7, highest probability. Got it? So why am I still looking for more upside and why we keep buying dips along this long journey? And we let for cycle rotations and we let the software cycle. We buy the dips, get to a position of authority and let it continue to run. Well, that's how you make thousands of pips and then some. So again, highest probability 127.45, 130. And why is that so high? Because we took the 618 about a year ago, then we took out the 786, with what reconfirms that these targets are extremely high probability until they're not. When are they no longer extremely high probability? We got to get below support. We break down below that. What is that? From the low up to the high, guess what? It's a 618, 786 zone. So this is why this is so important that we hold that, because if we don't, then we got high probability we go into the extension to the downside. And that's how you do it. One day at a time, one trade at a time, get to a position of authority. So in the short term, look at the daily. It looks just like the dollar index in the inverse. Identical. We're stuck between support and resistance. A bullish sign would be for us to close above the magic Fibbo. What happened the last time we closed above the magic Fibbo? Actually, candle body. Not a wick, but a candle body. What happened? We went ripping up to our target. This was one we said high probability. I made a statement then. We close below this area, the dollar's going to go down to that extension, which means we're going to go up to this extension up here, and we went right to it, right to that 618 retracement, as expected. We got a three-wave correction down. This looks like a more impulsive kind of move up. Got a little three-wave correction down. So this would lead us to what? Based on this move, should we break above this resistance zone, then we're en route to the bigger target. And my shorter term target would be 121.70, 122.60. En route to what? That 127.49, which is way over here, 127.45, 130, big bubble. So this is still a high probability target, but the ebb and flow of the markets is going to continue like this. Never just typically goes in one direction, even though when it looks like it, there's still corrections along the way. And this is what we're doing. So once we get above this resistance zone, what's the targets? 121, 122, followed by 2280, 2510, followed by 2750, 131. All right. What's my support zones currently? Well, go back to the most recent swing points. And right now, just like the dollar index, from the high to the low, we hit the 618, got rejected. But where did we get rejected to? From the low to the high, we rejected to the 618, and we're bouncing off of that. So this is why we're stuck between resistance and support. What's the higher probability? Well, if we close below this green box, then the higher probability we're going to go visit 113.50, 113. But if we start getting back above the magic Fibbo like we did this last time and close above, not a wick, but close above, it sets the tone we went right up in there. So I expect another revisit of these highs. If we get a candle body close above here, we're likely going to make a run up there. And if this next go around, we close above this pink box here, then there's your extension up there, 121.70, 122.60. Amen. So I'm still leaning more for the upside than I am the downside. But that bigger picture is the bigger picture, just like on the dollar index. This meets the rubber meets the road here. We get above this. This is in place and we go breaking out, which means the euro is going to go breaking down. When the dollar reaches 130, 140, where's the euro going to be? In my humble opinion, no ifs, no buts, no ands. This euro is going to be down here at 0.8, 0.7, way down here. So as the dollar goes higher, the euro dollar goes lower. So we're expecting the dollar to break down some more, which means we're expecting the euro to break up some more. But then when the reversal point comes, man, that's going to be fun. We'll be able to trade the euro ideally down from this 120 to 130-ish level, all the way down to below parity, back to this 0.8, 0.7 zone. You're talking years for us to get down there, but hey, that's still thousands and thousands of pips down. And up and until this high low, we broke the 618, broke the 786. That's still 75% chance this is an outstanding target. What it doesn't tell you is when is it going to get there? Today, tomorrow, next week, next month, next year. It's still a high probability target. And this is why I expect this to continue and why for the last 4 years we've been buying dips, making thousands of pips toward this upper quadrant. When we get up here, I'm going to look to short this back down as the dollar would go, what? Bounce to go breaking out to 130, 140. The euro should go reversing to start heading lower to that 0.8, 0.7. And I forgot to mention the dollar index, one level to watch as we use Ron Popeil slice and dice matic here. There's a big short squeeze at 102. What does that mean? Last year, the big trade, all the big money, the big trade was short the dollar. Anything but the dollar, man, short it. It's going to oblivion. Credit card debt, 36 trillion in debt. It's just going horrible. It's short it. So there's a lot of money shorting the dollar right now. So it hits 102, you're going to hit a short squeeze, in my humble opinion. And it's going to pop about 3 points. If we close above, not just a wick up there, but a close above 102, the probability we go visiting that 105 to 107 level becomes very high. 75% clip and then some. So I set an alert, 102. Dollar close above 102. What do? I can go long the dollar. You can buy like UUP, a leveraged dollar ETF that you can buy for the dollar. Or we can what? We know this thing's going to pop 3 points or so, then that euro dollar is going to go down 300 points or more. The pound dollar is going to go down 300 points or more. which is a high probability trade. What? Dollar close above 102. What am I doing? Shorting the euro dollar. Dollar close above 102. What am I doing? Shorting the pound dollar. Many ways to trade this. No buy, sell, the whole recommendations. I cannot tell you what to do. I'm not a certified financial planner. If you need someone to tell you exactly where to put your money, then hire one. But be careful. Nobody cares about your money more than you do, except maybe me. I like to see our students do very well. So, is this a high probability target? You betcha once we close above 102. But we're still more likely going lower low before that happens. But what if it happens tomorrow, next week, next month? We close above 102, long the dollar, short the euro dollar, short the pound dollar. Okay? All right. And again, just like I was showing the euro, because of that move where we closed above that 618, you can see on this chart, there was that 618 level we closed above over here, which meant we're going where? At 127, 130, 131 level. And then later, we even grinded up and closed above that 786 zone, which you can see we had candle bodies, weekly, daily, even monthly candles close up here, which reiterated we're going to 127.50, 130, 131. So this is why this is extremely high probability target. Then once we get up here, what do? Short it. We reverse back down and do a big reversal. So up and until price gets up here, I keep buying the dips, get into a position of authority, let it run. Like we did 4 years ago, we're up beautiful and we're still going. And if we get anything changes and price breaks below the support zone, then we instantly go short here and look for this thing to go much lower down toward 0.8, 0.7 zone. So all roads lead to this. But prior to getting to this, we have a higher probability we got to go visiting over here, which is this zone, and then we go down here. So what if I'm wrong in this little 121 area where we popped up to, not quite to 123, but we broke this one, we went up near that zone, and we got near that level, and what if that's the end? We break below this, we know we're going there. Otherwise, we probably need to go visit 128 to 131 zone first, then we go down there. And then the pound is in the same boat. Prior high, prior low. What did the pound do? 4 years ago, I made a bold statement again, said, hey, going long the pound's going to make us thousands of pips. It's going to take years, but we're looking for a correction. And once we finally get there, then we can look to short this thing, because I think the pound's going to go lower low in the coming years, which means lower than 103 and change would put us below parity down here. So when do we get here? When the dollar goes up to that 130, 140 target. Why do we still think we got more upside? Because we took the 618 around that 127.20 area. We later, you can see all the candle bodies closing above that 1448, 1786 range zone, 133.70. So Mr. Tucson, the higher probability trade, even though we've just been chopping sideways, doing nothing as of late, still outstanding 170, 147.70 area to the 152.60 area. Amen? Still a high probability. When does that change? Well, you got your low, you got your high, you see your 618, 786 zone out of that. See where it is? Way over here. From that low to the current high, this is my support zone. So when would this target up here be off the table? Price breaks down and breaks and closes below this, we're going lower low. And even that would be thousands of pips to the downside. That's still the plan. Extremely high probability this is where we're headed in the long term. Definitely be years out. But right now, because of the prior correction and price action, we're still more likely going to visit 147, 152 area before we're done to start moving down to lower low. All right? All righty. Be careful with the euro yen and the pound yen. They are climbing and grinding right back into our resistance zone. So if we can clear the hurdle, then we could target 188, 189 up here. But this is in the danger zone to fail. And this recent price action is somewhat suspect. This does not look like an appropriate, that's not what I wanted to do. This does not look like an appropriate three-wave move because that portion is way out of proportion. Normally A equals C, and this doesn't look complete. And even after this three-wave correction, we did grind to a new high, but look at all this overlapping chopping action, which all of that still looks corrective. Corrective of what? That prior run up. So we're still in a big correction. So yes, this thing could possibly go up to the extension. If it closes above this pink box, sure. I'll go long and shoot for a couple of hundred pips, 188, maybe 189 above that. But more likely, we still need a lower low to clean up all this sideways chop, ultimately giving us a lower low. Where's that target? 179, 178, 97, 179 and change. What's that? 179.80 down to 178.97. You can see the 1272 right there around 178. I know you see a lot of lines in here, but this is more likely going to get rejected up here to go lower low than it is to break out. What's the change point? We close above the pink box. We shoot for a couple hundred points higher. What do I do when I get up there? I look to short it again because this is still all corrective, and the likelihood this thing is just going to blast off into the stratosphere is extremely low, and the likelihood we get rejected and start pushing lower is much higher because of all this prior price action. Got it? Be careful. This is in the danger zone. Look at the pound yen, exactly in the same zone. We're exactly in the same zone. What if we close above this pink box? Then we could target that 217, 218. So we got a couple of hundred pips to the upside. If we do, if we fail, we're likely going lower low, which would be several hundred pips to the downside. Again, look at this chopping, overlapping price action. After the run up, you get all this chopping and overlapping. That doesn't look complete. It still looks very corrective. So it is what it is. Ms. Tucson, we close above here. There's your target. We don't close above here. We start getting rejected. Here's my target down here. And the software is kind of sitting in between, ready for more downside than upside. It's getting all overbought again. Pull that up for you and show you what it looks like. Here's the pound yen, euro yen, pound yen. Daily's getting back toward overbought. We're grinding toward that 618-786 zone. So what am I looking for? If we close above that resistance zone, then I shoot for a couple hundred more pips. Daily finishes cycle. Then once the PAI hooks down, we short it. Just like we did over here, made some pips. Over here, we made some pips. If we get pipped out, we'll do it again. Daily's getting back near overbought. Weekly's in overbought territory, just kind of hanging out. It's been grinding up here. And even the monthly's overbought. So I typically don't, when I see the software maxed out like this on monthly, weekly, daily, etc., yeah, you can scalp things in here. But when you start to see that bigger picture like that, monthly's hanging out like this, we're ready for some push lower. When do we get pushes lower? When your monthly starts reversing, massive move lower. Monthly reverses, massive move lower. And we're due for one of those. This has been a hell of a run up. If you'll recall from that same COVID low, made a bold statement in our archives. You might want to go long the pound yen. It is going to go up 8 to 10,000 pips, and it's going to make a move back toward this high and make a new high. We did that. Now what? Now we're extremes. Now we've been slingshotting on the daily, weekly. We're exhausted. The monthly's even done it. It's exhausted. What is this bigger picture from that high to the low? Guess what that zone is? On the much bigger picture, 618786 zone. So the bigger picture shows we retraced a 618786 zone. And we got a monthly, weekly, and daily overbought, so we're likely going to get a push lower. Amen? So be careful with this. This is why I've been shorting this, making some points, get pipped out, short it again. And that's all I care about. Just get in, get out. This was a much bigger long haul. Now it's time for a much bigger correction. What else do we know about the pound yen? Come over here back to the charting platform. And when you look at this from the higher time frame perspective, what does the pound yen do during financial crisis? Dot-com bubble burst plummeted 9,000 plus pips. 2007 financial crisis, 13,500 pips. Crash. What's next? The Elizabeth, I'm coming to join you, honey, crash. It's a matter of time. AI bubble burst, commercial real estate, $5 trillion plus of commercial real estate bubble bursts. I mean, right now, the car industry is in trouble. All car notes are like 1,000 or more. Over almost half of the cars out there are being financed out to 7, 8 years. We got some problems in the foundation, my friends. Elizabeth, I'm coming to join you in honor of Fred G. Sanford. It's coming. And the next financial crisis, it's a pretty strong idea. We're going to get a massive sell-off of the pound yen when it happens. Last one, dot-com bubble, 2007 financial crisis. What's this next one? I'm calling Elizabeth. I'm coming to join you. When is it expected to hit? Probably next year. I mean, it's hard to give an exact time, but we're going to look for those dates. But we know what happens when it does. This thing sells off. We got a little taste of that back in 24 when we did the carry trade unwind. This thing dropped 2,700 pips in a couple of weeks. Very quick drop. That's still looming. Elizabeth, I'm coming to join you. Massive. Maybe we split the difference. 9, 13, maybe we split the difference and do 11. We shall see. So I digress, but what does that tell us about this pair? We're getting extremely overbought, monthly, weekly, daily. We're retracing into the danger zone off of the recent price action. But if you do come out to that bigger picture I was showing you, just one second, and you come off of this bigger picture, you come off of this high to this current low where we did the big reversal, guess where we are? We're right in that 618786 zone. This is reversal zone. If it's going to reverse, great. If we can break above it, then we could even go higher high. Anything's possible, but it is with price action. But this is why when a monthly's overbought, a weekly's overbought, my daily's back in overbought territory, I'm not conducive just to keep going long every day. FOMO, fear of missing out. I did that over here. 8 to 10,000 pips. Went down from 126 up to 216, 217, wherever we're about to get to. In that zone, we're at 215. That is thousands of pips, right? Exactly what we expected. Now what? Bigger picture, we're right in the reversal zone. And with a monthly overbought, weekly overbought, daily overbought, I'm not conducive to buying and going long, expecting this thing's going up thousands of pips higher. I'm looking for this thing to reverse. Amen? And if we get a financial crisis, which is looming, we know what's going to happen. This thing is going to go plummeting. So please be careful. Take aggressive profit. If you're up 66 pips right now on that little bounce today, I'd take aggressive profit. Sure, it could maybe close above and go a couple of hundred more points I just discussed, but until it does it, I'm not interested in touching this right now. Amen? I'm interested in selling the rally. And this is still overlapping and chopping. And after this initial move down with all the overlap, we still need another push lower. It's coming. Is it today? Is it tomorrow? Do we go just a little bit higher first? But again, I don't make a habit out of going long these pairs when a monthly's overbought, a weekly's overbought, and a daily's overbought. Amen? All righty. Enough of that. What about the markets, my friends? Markets. Punch junk euphoria. Is this thing ever going to stop going higher? We kind of reached our extension targets. Be careful. We went up and hit the target I said last week. You remember what we discussed? I said, expect ES and NQ to bounce up to target extension. Then before that, we said expect that small retrace to the prior breakout point. Then it would go extension hunt. Every time we get a little bit of sell-off, the bulls step in. Interesting. They think it's never going to stop. That's the kind of insanity that sets up the next market crash, where it's never going to go lower. Oh, yeah? Be careful. So we did expect these things to happen, and that's what's underway. Now what? Now that we're getting to those target extensions, be extremely careful, because it is due time for another correction. We've been getting these little dips. The bulls step in and go, yeah. Well, the most recent extension, we already reached it. Now we have this smaller version. Let's go to like a 30-minute. Give you a potential upside target for this continuation. And here's that prior correction. And we have this high. We have this low. If we can close here today above that 76.20, what are some upside targets? 76.39, 76.46. Right? If I'm long on this, I'd be in a position of authority, because after this run up, we're due for another correction. And on these smaller time frames, it just keeps bounce off the magic fibbo, go higher, bounce off the magic fibbo, go higher, bounce off the magic fibbo, go higher. So again, yeah, this is still 76.30, 76.40. That kind of fits the motto we've been in the last several weeks, where we just get a small pullback, we break the 618, we go to extension, get a pullback, hit the extension, get a pullback, hit the extension. So I guess rinse and repeat, but just be aggressively taking your profits. We probably have, like I just said a minute ago, maybe another 20 points, probably higher. That looks like it wants to come into play, but I would not just be loading the boat long up here. Look at this daily view. This daily view has been out of control. Since our correction, we pegged that. Man, did we peg that one. About this overlapping chopping action, said we're not going to go breaking all-time highs until we make a new low. And this was back in April. And we even made a statement then. This is a great time to look for this bounce to go rallying in. I still feel with got a strong feeling in the pit of my stomach that we're going to have a fall in the fall. We're going to fall in the fall, my friends. So be careful. The more this thing runs with these little simple, every little dip gets bought, every little dip gets bought, we're going to see some big time movement. So be careful that I still think we're going to fall in the fall. So do we finish this up? The plan was this thing to rally in May, June, right? Up through April, May, and June. Well, we did April was such a huge one. And now May, we continue this. In June, we're still doing it. But once we get into summer, like July, maybe July, August, September, October, I'm looking for a pretty big pullback. After that massive run up off of this, but even go out to a 3-day view, and you can come back down here to Liberation Day low. Massive run up, correction we look for, massive run up. What's coming? Correction, right? Correction's coming. So in the fall, I'm looking for a fall. And then I still expect, especially if we can get this weekly, see my weekly magic fibbo right there? If we can get that pullback into the magic fibbo like we did coming into March, April, Liberation Day run, I'm looking for another one of those into next year. Santa Claus rally into next year, and we get a massive blow off top, which sets potentially, Elizabeth, I'm coming to join you, honey, the big one into next year. I digress with that, but in the short term, please be aggressively taking profits. Yes, I think this will probably, because we get a small retracement, we grind to the next extension. And if we close, like I showed you on that 30-minute, we're right in that zone. We're breaking the 618, we're breaking the 786. So that's why 63, 7630, 7640 area looks like a logical place to go next. But again, be aggressively taking profits on this because we're going to get a correction coming. And as we get into the fall, I'm expecting a much bigger correction into the tune of thousands of points, where right now we're sitting about 6,000 and we're at 7,600. So maybe 1,000 points or so. We're at 6,000. Would love to see this thing in the fall over a few months period come down here, give us a big correction. Then in the fall, we go long again, especially if we can get this correction back to the magic Fibbo, which is from the Liberation Day low over here. Remember, we're Liberation Day low over here to this run up. That's a 618 retracement off of there. It's kind of in the way right there. But that would be a 618 retracement, not off of this guy. This would be up here. But you see where the 618 retracement is? Right there at that weekly magic Fibbo, Mr. Tucson and others. So if we can get what we call a combo meal, low, high, you get a 618 retracement slash combo with a weekly magic Fibbo bounce, just like the Liberation bounce there gave us that big run up. We're going to look for a duplicate run up into the stratosphere, potentially put us in the upper 8,000s. So another 1,000 points, upper eights, maybe even as high as 10. Where does that come from? That's if you get the combo mirror. You get this run up, fall pullback. We pull back toward the magic Fibbo and a 618 retracement all lining up, combo. Then we bounce, that sets the tone. We're likely going toward this, at least the 87 zone, if not pushing toward 10,000. Wow. Another big, huge run. Then what? We get into next year, first quarter-ish, something like that. And then we look for Elizabeth, I'm coming to join you, or certainly a big market correction nonetheless. Okay? All right. What could potentially set something like that to go off? Well, let's look at NASDAQ again. It too is doing the same thing. We had those big run-ups. We get the fall in the fall. We come back toward what? 618 retracement off of that and a magic Fibbo combo. That could set this thing up to go to the stratosphere. And that stratosphere could put us in the 40,000, maybe 45,000. What? We're at 30,000. We're going to get a 15,000 potential point run. If we get that big pullback in the fall, yes, that could set up for the next big bounce off the magic Fibbo with the 618 combo that sets the tone, potentially pushing us to a 1618 extension, which is up near 45,000. So we kind of said we were going to get toward this bubble. We're there, getting closer and closer to the beginning of that 30,000 range. We're already there. That's where I expected we'd get the fall pullback out of, then potentially stratospheric move into the 40, 45,000. We shall see. So where does that leave me now? Well, same thing with the latest move. Every time it sells off, this is what we said last week. Look for this thing to go toward the extensions going into last week. What did it do? Went toward the extensions, high probability. Recent high, recent low. We closed above the 618, 75%. We were going to 30,004. 70+%, we're going to 30,005. And what's the likelihood we're going to go touch up here at 30,007? Good, right? How do we know that kind of fits the script, right? Just looking at this latest move from that outstanding target. And what happens when we hit the 618? We retrace back to Magic Fibbo to bounce to do what? To reach the 618 up here, 1.618. So that's that 30,007 zone. About another 100 points, 100 plus. Do I think we're going to grind that way? Sure, eventually. Is it going to be today? Possibly could. But we're watching this most recent pullback. So when you stretch that out and I zoom this in, we're going to do the same. Looky, what just happened? You kind of get an idea. Recent high, recent low. We're tested the 618, got a little pullback. Where do you think this wick went down to? Ladies and gentlemen, where do you think that wick went down to? Use the recent low up to the recent high. We went right to that 618 retracement zone to bounce. Right? So far, so good. So the idea of this high, this low, we're closing above that 618,786. If we close above here, 30,007.50, 30,008. And where are those right dab in the middle? 30,763. So this looks like it's going to keep grinding this insane grind toward this next target. Be careful. Be aggressively taking profits because this thing could fail here, go lower low, and then bounce to get up here. Because typically, what happens? You go back and retest the prior when you break out. You come back and retest where you broke out from before you then go up to the extensions. We talked about that last week. We came back to this zone to retest the breakout before we went back to our extensions. That was kind of the plan. Price did that. Now what? Do we go up here? Yeah, this is a viable target. I would definitely be aggressively taking profits because this thing could easily pull back further. Maybe we need another bounce off of this little magic fibbo here. But this run up has been insane. We're due for that big pullback, the fall in the fall. Is it going to start September? When do we bottom? September, October? Something like that. But when does it start? After this big run up, we're due for a correction. We're due for a pretty standard type of correction here. Look at that daily. This price action was spot on. Mr. Tucson, remember this conversation a few months back? Hey, NASDAQ made a lower high. That's dangerous. All this chopping and overlapping price action is screaming. Harold, we need a lower low before we're going to make a higher high. Before we go into all-time highs again, we got to have a lower low. We got it. What did we say in March and April? Look for this thing to go ripping. This thing was underwater because the ES actually made an all-time high in this zone where NASDAQ did not. This expected that correction. Now we expect it to blast off. I didn't quite expect that. I look for April, May, and June to rally, certainly, but not to this overkill extension up here. So what's next? Fall pullback. Fall pullback. Just like we had a run up, looked like it would never stop, just keep dipping and grinding. And what do all these things do? They dip, they reach an extension, they dip, they reach an extension, they dip, they reach an extension, dip and extend, dip and extend, dip and extend. Well, this dip and extend's coming to an end, my friends, so be careful. And we're going to get that fall pullback. It should be substantial. And if it sets up like the rest of these, go to that weekly chart. Look where it's sitting. Right now, the magic fibbo is sitting down here 21.6 to 20,009. So could we honestly, after this insane run up, get this fall pullback to set up then one more blow off top going in the next year? Yeah, that would put us in the 45,000 potential if we can get that fall pullback. And notice from the Liberation Day low up to the high, that 618 is sitting, and there's too many on here because I got them everywhere, but let me remove these for you so you can see a clean one. I do this every day and I go down to small time frames. If I'm scalping, if I'm doing a bigger position, you kind of get those targets and we continue rinse and repeat. But all this is using this on all those time frames, and it looks like nothing but lines. But I want to call this one out to you because this looks like a viable scenario. We currently have this low. I'll leave that one on there for that's the extension for later. But we currently have this low. We currently have this high. And look where that 618 is sitting. We're right in the zone of a 618, 786 zone. And look where this baby's sitting. And if we get several weeks to months going into the fall, we retrace. This is sloping upwards. So these numbers do not sit here week after week, each weekly candle. It's going to keep drifting higher. And over the next several weeks, as we go into fall, we'll probably get that fall pullback. And we could end up with that 618, 786 retracement combo bounce. Right? So be careful with this. Yes, I think we're going to grind higher. Yes, I think we're headed toward that 7 and change, a little bit higher, maybe about another 100 points. But when the correction starts coming, it is going to be pretty gnarly. And I would expect that ideally we'd love to see a weekly magic fibbo correction, and we get the combo low, high, 618, 786 magic fibbo combo bounce, which would put a minimum target 36.3 and a maximum target about 45.3. And the sweet spot in between would be right here, my friends, if we get that retracement in the fall. Here's the sweet spot retracement zone. And we're already reaching the target we were looking for, so I'll remove that one. And let me remove that so we focus on what's at hand. This is higher probability target going into the end of the year, potentially pushing up is 45. But in order for us to, I don't think we can just keep grinding up here without, anything's possible. Look at this. This thing has been going insane the last few months. Could it keep going? Sure. But we need a 618 retracement out of that sometime. You typically don't go up forever until you get a 618 retracement. Notice how this rinse and repeat over the year. What did we do? 618 retracement. Can't make this stuff up, ladies and gentlemen, right? Can't make this up. We've overdue for a 618 retracement after that run up. We didn't get one. Watch this to that. We got roughly a 50% retracement, not a 618 is that darker green line. We didn't get a 618 off of that. We're overdue for one. Now we got this insane run up again. We haven't got a 618 retracement. So why is the fall in the fall, Harold? Kind of logical for our trekkers out there. We got the Spock logic. It's logical we get a 618 out of this sooner than later, but no later than later. So yes, be careful. If things grind and punch junk euphoria, it's onward and upward. But we get the fall in the fall. This would be a great buying opportunity like we talked about buying here. For this run, I'm looking for a duplicate type of thing when we get if we get it all the way to that magic Fibbo 618 combo bounce, then this could push us in the next year and push us in the stratosphere and might even go hunting for that 45. Wow. But then it's, look out, we're going to get a big correction. Okay? So in closing, Right now, on the lowest of time frames, this is starting to break out again where we retrace to the extension and we prior breakout, then we go blasting off. You can see we've been doing that. Rinse and repeat. We did what? We had the low. Let me take my Fibonacci's on there. We had this right here. We had that high. We had this low. We hit the extension. Then what did we say we needed to do? We need to come back to where we broke out from to then continue. Well, we just did that. We did it a second time. And now we're breaking back up. So why do we look like we're going higher? Look at your extension. High, low, taking out 618, 786. So what's the targets up there? 730, 770. About another 100 points. Right? Be careful when it gets up there. We do need a correction, and it's coming. And then not only is a correction coming, but one of these corrections, you feel like, well, Gary, these are typical. You get a little correction, we go to extension, you get a correction, we go to extension, get a correction, we go to extension. Well, one of these coming into the fall is going to give us a correction, and you think it's going to be one of those, well, it's going to the next extension, and it fails miserably, and we get that big fall pullback. Right? So the goal was to run up into May, June. We're in June. It could continue because, July is way over here. We got another several weeks in this month. So this retreat, extension, retrace, extension could continue a little bit longer. But I still feel that we're going to get that big fall pullback sooner than later, but no later than later. So what are we learning here? Take aggressive profits on these moves. And yes, you probably got about another 100 points coming, but be sure you're in a position of authority that you don't wipe out that 100 points that you already have and seeking another 100 points. All right. What about IWM? Still think we're in the process of kind of chopping and grinding in here. I still think we're headed to that 300 target we mentioned like last week and before. This is still a high probability target. We reached the first extension. We pull back to where we broke out from. Sound familiar? We reach back to where we broke out from after reaching extension, correction. So what's this likely pushing us to? Next target up here at 294.47. En route to 300, 301. So can we actually get up here to 295, retrace back to retest that, and then do it? Sure. Part of the ebb and flow, but be aggressively taking profits on this because, yes, I do think we're going higher, but this thing's been on a massive run as well. Look at these. That's quite the run for IWM. Look at that run. And we really haven't had the deep retracement yet. It's coming. But this is typical. We kind of broke the 618, went to the extension, retraced back to where we broke out from, went to the next extension. See it? Rinse and repeat, even on these higher time frames. So what's next? We're due for a fall pullback. So where do we stop? Do we get to 300, 30, whatever target? Then we get the fall pullback. That's kind of the plan. And then we get that fall pullback. Ideally, I'd love to see from the low to the high. Look at the 618. Got these lines all over here. That high, this low. You can see where the 618 is right at my magic Fibbo. All these are setting up that way. And Mr. Tucson, we get this pullback in the fall. We get the combo meal 618/786, that retracement zone, and it also touches the magic Fibbo to bounce off of. Then that could push us in the stratospheric move up here in the mid threes. So where do you get that number from? Let me take this off so you can see it and use the 3-point tool on that. From that low up to that high, we get this retracement. Then we'd look for 354 minimum. Sweet spot up here to 372, 388, and might even, if we get this combo bounce, push us toward 430. Wow. Talk about a move. Then what? We get to any of these stratospheric targets up here as we go into next year, look out below for the big correction. If not the Elizabeth, I'm coming to market, I'm coming to see you, honey, and we get the big market crash. But the foundation's got cracks all over it. It's just a matter of time, not a matter of if, it's when. And the timing, if this plays out like we're talking about, correction in the fall, get another big rip-roaring type of move. And then we look into next year, a potential big correction. It may not be the Elizabeth, I'm coming to join you market crash, but it is going to be a substantial correction. Amen? All righty. So any questions on the markets right now? Punch junk euphoria is continuing. It's like they can't get enough. It just keeps going higher and higher and higher. You get a little pullback, the bulls step in, and you do your little pullback. You go to the extension, you get a little pullback, you go to the extension. But remember, as we move closer and closer through June, I was thinking kind of July, August, September kind of thing, maybe October, that fall pullback, setting up the year-end blast off into the stratosphere, into next year, Santa Claus rally, next year type of move, then a much bigger correction coming thereafter, and might even include the Elizabeth, I'm coming to join you. So look for slight more upsides, be careful, be aggressively taking profits. And even this one, we're talking 300, only a few more points. The next extension up there, we just showed you when you go like this. Well, I'll do a 30 minutes so I can stretch that out a little bit more. But this is looking good for a potential continuation. We got to close above this. We're testing it. So if we close above this, then we're likely going 293, 294 en route to 300. Okay? But be aggressively taking your profits because this could easily give us a failure reversal for this bigger correction. Then we bounce and go up here. But I definitely think we're going to 300. Got it? Definitely think we're going to 300, but we could get a little stair stepping in there to get there. But we're going to 300. And if we get the fall pullback we talked about, then that 300 becomes mid threes, 350, maybe a little bit higher, maybe even 400, which sounds insane. But let's just see if we get that magic Fibbo bounce / 618 retracement in the fall. If it plays out like I'm thinking, this would be another great buying opportunity like we had here. Going in there, we're going to look for the same type of thing. One more equality type move up. Then next year, maybe first quarter-ish when we're up here. If we get this pullback like we're looking for, then it sets up a beautiful move into the mid threes. And then we can take profits up here, expecting a big correction coming thereafter. Okay? All righty. Look at the Nikkei because of its global liquidity. This thing doesn't look like we're going to get the pullback I'm looking for until later. So this is why we just keep grinding up. It's just keep going. Punch junk euphoria. It's insane. Well, guess where we're sitting and hitting? Yet again. Recent high, recent low. We're at the extensions. What's the next target? 70? Do we get to 70 before we get that pullback? Maybe. Do we push up here to 74? Kind of confluence of events right there. 74 zone before we get that pullback? Anything's possible. But once global liquidity takes its big hit, which it's coming, it's going to pull our markets down too. So what am I looking for? The big fall pullback. Sound familiar? Big fall pullback. Well, can this thing keep grinding a few more points, 70, maybe 74 zone before we hit it? Yeah, we still got another several weeks before we start getting through June. And then I think July, August, September, October, we're going to look for some sort of correction. But notice the same thing. See how all these are lining up? Can't make this stuff up. Got the low, ripping up to a 618 retracement right at my magic fibbo. We get that combo bounce. Then we can have a stratospheric type of move, but I still want to see a bigger pullback in the fall. Any questions? What if I'm wrong and the big pullback is smaller and we don't get this magic fibbo bounce on a weekly? Well, notice this latest move. And I'm going to take this out and just look at this latest move. Take that out. And why are we looking at this? I don't trade the Nikkei. It represents global liquidity. And when global liquidity is flowing, our markets grind higher. When global liquidity is contracting, our markets go down. Correlated 98% when this thing is contracting, ES is going down. 98%. How about that? That's pretty high probability. And not from the low up to the high, we're due for some sort of retracement. So is it possible, Mr. Toussaint, since it's so early in the month, we could get some sort of retracement and do like a little combo bounce, magic fibbo kind of bounce off the daily, and still go bouncing by the time we get to July, and we would do some sort of extension on that? Yeah. That would put us right around that 74,000, but that would kind of be what I was looking for on a smaller scale. That low, that high, we get a little combo bounce, and notice where that is. Exactly at 74. I sit here and draw these levels all day long, knowing the higher probability. We talked about reaching the target, we're there. Be careful on this. Yes, I think we're going up here, but we could easily get some sort of correction in the interim, a couple of 2-3 day or whatever correction, and still bounce going in towards July. And then we get the big fall pullback. We don't have to do this. I definitely think we're going up here eventually. The question is, do we pull back first or do we just keep grinding up there? We could easily just keep grinding. This punch junk euphoria, just day in and day out, it looks like it just keeps going, right? Keeps going, my friends, keep going. Get a little dip, bull step in, you go to the extension. Rinse and repeat, rinse and repeat. And even off the latest little move, that little correction, we're reaching the extension, so be careful. This thing could pull back for another little buy the dip and continuation, but the plan is probably going to start pushing toward that 70 to 74 range, probably before we get the big pullback we're looking for in the fall. That's kind of the plan. Okay? All righty. What about Black Gold Texas Tea, the Beverly Hillbilly? Well, this is what you call deal or no deal. Y'all remember that show? Deal or no deal. If we get a deal, we're going down. We don't get a deal, we're going up. Deal or no deal? What's it gonna be? Well, technically, we're breaking out of this squeeze, and we kind of retested that yesterday, got rejected. We're kind of sitting over here, but don't let this fool you. Remember, we kind of talked about these squeezes. Yes, the size of the mouth, which is this opening up here, that was March the 9th to the low of March 10th. In 2 days, look at that volatility. From 119 all the way down to 76, I believe it was. Let me get my crosshair on there. 76, let me get it. That low went down to 76, 73. and a high up here of 119.48. So from that high to this low, that's the mouth. We call it this squeeze, and you're getting lower highs and higher lows, and we're just kind of squeezing in here. And we drew this and we said, well, once it finally breaks, we're likely going to the 60s or we're going to the 130s, 140s. And which one's it going to be? Well, it's deal or no deal. No deal, we go up here. Deal, we go down here. And this looks like it's breaking down to the downside, but remember how we said it. About 60% of the time, these squeezes are unreliable as all get out, because when you think they're breaking down, they reverse, or you think they're breaking out and they reverse. 40% of the time they break out and they continue to do the size of the mouth. And then 40% they break down and they continue down. Otherwise, it's like 60% it head fakes to break out to go down, or it head fakes to break down to go up. But what is reliable ultimately is that once this finally plays out, we're going to move the size of this mouth, which is these arrows. We're either going down to the 60s or we're going up to the 130, 140 area. Got it? So if we don't get a deal, expect we're going breaking out. If we do get a deal, expect we're going lower. And in the interim, be extremely careful. I'm perma-cautious on this because, yes, the pattern says we should go lower low. We broke out of this. We're not only that, but look at from the low to the high, 618. We closed below the 618, Mr. Tucson. So just on our typical retracement extension zone, come up over there, just from that low there to that high, tested the 618 before and we bounced, and we tested to the upside to 618 and we failed. And now we broke lower. Notice where these closes are from that low to that high. 618's right there. We closed below it. So what is that telling us? Harold, we got a 75% chance we're going to visit 74.70. 70 plus, we're going to 70.85. What's in between there? The magic fibbo. But because this broke down, you're thinking, well, sure, we're going to 60s. And because we closed the other day saying, yeah, we got a 75% chance we're going down here, we're still stuck between deal and no deal. That overrides everything. So while we're in the deal or no deal scenario, you got to take aggressive profits. If you're buying a bounce, take aggressive profit. You're selling something, take aggressive profit. Because instantaneously, no deal, deal. What's it going to be? Be careful. This technical picture says we need more downside. But the technical picture is not going to play out if we don't get a deal. This thing is popping that direction. But let's just see how it ultimately plays out. We're either going to end up here with no deal, or we're going to end up down here with deal. And the size of this will ultimately play out. That's high probability. But it's just getting to the point when it finishes. Is it a fake breakout, or is it kind of a breakout retest and yep, it actually plays out? But ultimately, whether we get down here or up there, the size of that mouth, which is these arrows, is playing out. Okay? All righty. So take aggressive profits, Dan. And I would not be going short here. I'd not be going long here. I'd just be taking profits and waiting for price to prove itself. So we get deal, then we get short it knowing we're going down. We get no deal, and there's rockets flying again. Then expect once we get above that 618 zone up here, then we target 123, 125, basically 130 en route to 140. All right? All righty. What about gold? Gold, in my humble opinion, be awfully careful. There's a make or break level on this, but the bias is we're going down a 39, 37 zone, highest probability, until it's not. When is this deal off? Talking about deal, no deal. We have a deal to go lower as long as we stay below 5,000. That's this big line up here. We stay below that line up there at 5,000, then we have a very high probability, and I'm just going to straighten that out, make it a little bit straighter. We stay below 5,000, we're going 39.37. This thing goes ripping above 5,000, then off the table, we're going higher high. 5,000 critical. Mark that down. Put a sticky note. Put a little line on your chart. Otherwise, highest of highest probability. We're going lower low, and we're going to keep this stair step grind, grunt, laboring decline. And the target is we need a lower low. Need a lower low than what? At 4,100. We dipped down to 4,098, I think it was, and then we're reversed. But all of this chopping and overlapping states we need a lower low before we can go breaking out. Amen? So if you're scalping in the long, I'm not really trading gold right now because I'm waiting for this to play out. Then I'm going to load up and look for the next big run, the 7,000 to 10,000, which should take a few more years. I don't think we're going to go from 39.37 to 7,000 to 10,000, which is the target over there. I guess I'll go to a weekly. You can see it. This is where we're headed. And I don't think we're going to dip down in here and get up to 7 to 10 in a matter of weeks. I don't think it's even going to be a matter of months. I think it'll probably be more like a few years, but it's definitely a high probability. Are we going to get up here? You betcha. Are we going to go lower first? That is the higher probability. And as long as we stay below 5,000, we should head down and make a new swing point low below that 4,100. So anytime gold's below that 4,100, dipping into the 4,000s and lower, that's nibble zone. We push toward anything deeper than that 39.37, big time buy zone. Anything lower than 37, would I be embarrassed? I bought at 39, bought some more at 37. What would I do if I went to 35? Buy a bunch more. If I can get this weekly magic Fibbo near this zone, that 35 area, anything below 4,000 pushing down is buy zone. 39.37 is big time. That's my sweet spot buy zone. And then anything below 37 is a gift. And if we can do some sort of fall pullback, we kind of get the same kind of thing where we pull back into the fall here and we touch anywhere near 35 or lower, 34 or lower. That is, get on your knees and thank the good Lord above, because you're talking at least a double plus to get up to that target. And just a little review, way back when gold hit this 1900, I didn't make a prediction. I made a bold statement again. I can anticipate with the best of them. Why is our software called the Market Price Anticipator? Because between my God-given talent to read and interpret price, Fibonacci's the tools we have, the software, this thing said we were to do what? Go to 1,000 before we then went to 3,000 to 5,000. That wasn't a bad statement back in the day. And now my statement is we really need to come below 4,000. Preferably we get near 3,500, 34-ish. This weekly magic Fibbo would be ideal. This is get on your knees and thank the good Lord above kind of. Thank you for going so low, because the next move up is 7,000 to 10,000. Massive run still to come. So in closing on gold, back on the daily, why do we think we still need more downside? Because I said so. You need anything more than that? I mean, come on. We have fun. That's part of the process. Have fun while you learn. But this is screaming, Harold, we need to go lower low, my friends. This chopping and overlapping and chopping and overlapping and chopping and overlapping. And even if you go further out, we're still chopping and overlapping, because when the gold train was a running, what did I tell you? Look out, it's due for a big correction. Spot on. It's like weeks after we talked about this run. So this gold train is going to stop and it's going to be ugly. Massive correction. Well, this initial move down was corrective, obviously impulsive move down. So this rally up, I even told you during that rally part, this is very unlikely going breaking out right now, because this looks like a bigger degree type of A. And then we had some sort of three-wave correction. So I was looking for a C to come down and finish this correction to then set up the next run. But this is impulsive, that's corrective. Then what happened after we got that move? Overlap, 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 overlap. So what is this bigger picture that we're still playing out? This initial move down, which was very impulsive, that's still the A. That move up to a 618786 zone was the B. What is this down so far? 1, 2, 3, 4, and we're subdividing 1, 2, 3, 4, 5, C. What does all that mean? Dude, ladies and gentlemen, we need a lower low to correct this and finish that correction before we're logically going to go breaking out to 7 to 10. That's what it's screaming. So the make or break level of this whole scenario is that 5,000. We break above 5,000, then it says we're ready to go breaking out now. The probability that happens, where we just go ripping from here to go breaking out, is very low. Ultimate probability we get to 7 to 10,000 is extremely high probability. I'm 100% confident, well, I should say, I'm 1,000% confident on a 100% scale. How about that for confidence that we're ultimately going there? But this price action suggests we need a lower low. So no buy, sell to hold, but anything lower low, nibble. Anything pushing to my sweet spot of 39 to 3,700 is the sweet spot, nibble harder. We're blessed and we go anything lower than that, start pushing in the 3,600 level, nibble harder. And if we get down to that weekly magic fibbo, which is down here around that 35 area, 34 and change, where we are now, is what? Back the truck up and smorgasbord kind of meal. Because ultimately, we're minimum a double from 35 would be a double, because that's the bottom of the target at 7,000. How about that? So, as long as we're below 5,000, we're going lower low. I've been calling for it for a very long time. After that initial move in this rally, I said, this isn't a breakout. This is still overlapping. We need what? A lower low. Even after the lower low, if this thing would have just started ripping and had concise movement, great. But this still didn't look right. Impulsive, corrective. This was good. We got the lower low. But why did I say at this point, I don't think this is the breakout right now? A, because of this initial chop, overlap. Went up, overlap with the prior highs. Went up, overlapped again. Went up, came back, overlap. Went up, overlap. So that's why we kind of look at price action and say, what's the probability? We need a lower low to clean this mess up before we can really structurally start ripping higher. Yeah, that's the plan. So I said it for weeks now. Any rally should be sold in the short term and look for price to go below the 4,000, at 4,100 right here. It was 4,098. See, watch right there. 4,098. So anything lower than that is enough. But 39 to 3,700 is ideal. Why? You look at many reasons. A, you use the recent low up to this current 5,000 high right there, 49 and change. And you break the 618, which we're testing right now, 39, 38, there's your 38 and 37. That's why this is my sweet spot. And from the recent high to low, we already closed just the other day. See my green line right there? That low to that high, where we get a close below this little wick here, kind of sets the tone. We're going lower low. So what am I looking for? This final 1, 2, 3, 4, 5. So what would I expect this push down to? Probably a slight higher low, get a small little bounce, then we get one more thrust into that 39, 37. This is where I'm looking for. So in closing, anything below that prior swing point is enough and could warrant certainly nibbling. We get the 39, 37 ideal target, nibble harder. If this thing dips down any lower than that, keep adding. And if we're blessed enough to come down to that weekly magic Fibbo, which again is right now sitting at 33.78 to 32.29, big fat line. We get anything near down in here, back it up, because this thing is going to explode higher in the years to come toward that 7 to 10. But all roads lead to this chopping, overlapping need. One more flush to set the tone to restart. And this could be a perfect fall pullback. And if we get that weekly Fibbo thing down in here, like the markets we were talking about and all, maybe wouldn't it be kind of interesting if we get the fall in the fall and we get a weekly magic Fibbo on NASDAQ, we get it on ES, maybe the Dow, we do Nikkei and gold, fall into the fall. What a beauty. Sets the tone going much higher on these. Not only the market's going higher into first quarter, but I don't think gold's going to be up at 7 to 10,000 first quarter of next year. No, where we're talking on the other ones, we get those extensions, probably Santa Claus rally in the next year. Gold should probably take a few more years to get there, but it's still extremely high probability target. Silver is pretty much ditto. Ditto, my friend. Remember this silver run? We were long silver for the longest. Told you it was running up there. And then we said, be careful, take profits. We're going to get about a 50% retracement on silver. After that run up, when it's insane parabolic moves, you typically need like a 50% retracement. Where are we? From that high down to this low. Mr. Tucson, that's pretty damn close to 50%, 49.84 roughly. And I didn't get the exact high, probably not the exact low, but it's right in the neighborhood. Well, I still think I'm going to get my 50% more, and 49.84 wasn't enough. Why? This does not look complete, because this initial move down wasn't proportion with that move down. We did get a lower low, but look, since that lower low, chop and overlap, chop and overlap, chop and overlap. So the prior probability, we still need another lower low. It's still higher, just like gold. So we get a pullback into silver. Anything below that swing point low into the 50s, buy zone. We get a deeper retracement. Man, if we can get this weekly down below 50, dipping its toe anywhere in the 40s. If silver dips its toe anywhere in the 40s, that is smorgasbord city to buy some whatever you want to buy. Some silver bars at Costco, to some silver ETFs, to any of them. ETFs, miners, because this thing is due to go ripping. And what is the goal to go for silver? 150 to 200. That's the next upside target. So I don't think this correction is over, and this is just part of chopping and grinding. We're ready to go blasting off. Even though, again, this target up here, I'm 1,000% confident on 100% scare we're ultimately going to get there, 150 to 200, but we still need a lower low to clean this overlap up, and it kind of fits the tone with this bigger correction to set the tone to go much higher. Can I promise you it's going to make it down to the weekly magic Fibbo? And we're going to get to that 4643 range? No, I can't promise that. All I know is if it does, that's kind of get on your knees and thank the good Lord above. We're going much higher. And this could be a triple, if not a quadruple. We get into the 40s, we could go to what? 150 to 200, 160s right in that neighborhood. That'd be like a 4Xer, quadruple. I like it. Amen? All righty. So I do think we still need to get lower low to clean this up. Anything lower than the prior swing point low, we start dipping into the 50s, buy zone. Anything lower than that, we get into the 40s, get on your knees and thank you zone for this thing to then go ripping. And I don't think we're going to rip. Even if we get down here, we're going to go ripping from here to 150 to 200 by like next, first quarter next year. Nothing like that fast. But over the coming years, do I think we're going to get up there? You betcha. All righty. Let's go. Bitcoin. What the what, Harold? What happened to the Bitcoin? What did we talk about? We needed this retracement. We desperately needed this retracement. Now all roads lead to A, we don't hold the support zone. We close below it. Anything below that 64, I think we're going 50 to 30. And this ends up being the rally. But we still have time, my friends, for this thing to bounce into this and fall into the fall. So remember, you said at Polymarket said a higher percent, 80-something percent said we're going to visit the 70s before we go bouncing. Well, be careful. We may not get the bounce. We don't hold the support zone, then all eyes go to your extensions lower, 56.8, 70 plus percent, 53.9. And what have I been calling for a very long time? Into the fall, September, October is kind of the plan that we get to 50,000 and lower. So whether this thing continues to plummet 5,000 a day and we get to 50,000, I'm going to nibble, start buying. We get to 40,000, I'm going to buy more. And we get to anywhere into the dip out toes into the 30,000s. Man, that is smorgasbord. Back it up, because our next run, when we go into 2029, post-halving 2028, so I'll put this out on a weekly, every 4 years you have a halving. This has been rinsed and repeat, fourth time, going on the fifth, back in here in 12, 16, 20, 24. Next one is 28, so that's 1, 2, 3. We just went through the fourth one, which we rallied up. Now we're coming into the fifth one in March, April, May of 2028. Then what happens? Every 12 to 18 months post-halving, Bitcoin rips. Then we get a crypto winter, we dip. And it's no coincidence that in the history of Bitcoin, we top out in 13, 17, 21, 25. So I'm already telling you, right, Harold, when we buy down in here, likely in the fall, but any day we get below 50,000, we nibble. We go to 40, we go more. If we can get lucky enough to get to any dipping in the 30,000 range, load it up. Like we told you over here, when Bitcoin is below 20,000, it's committing a crime to buy Bitcoin at 20,000 and lower. It's a steal of a deal. It's like committing a crime to buy it. And what did we say? 12 to 18 months post-halving, fall of 25, we would do what? Take profits. A year later, fall of 26, we should bottom in this zone, but I don't care about the timing. 50,000, buy some. 40,000, buy more. 30,000, get on your knees and thank you and buy as much as you can. And hold it to what? 2029. So we're expecting this to go up to 200,000 and higher by the fall of 2029. Just like we said here, we'd buy down below 20,000 and we'd sell. And please forgive me, I did give a target of 150 to 170, 175, that kind of target up here. Well, 20,000 to 126,000, that's not too bad, right? So we just missed the target. Well, what if I'm wrong this time and we only go to 180 and I'm buying at 50 and lower? That's still more than a triple. I think everybody will be happy. This was 20,000 to 120 plus. Beautiful. What if we do that again? Say 40,000. That would be like 240 if we get a 6x from 20 to 120. 20, 40, 60, 80, 100, 120, 6x. What if we get that next time? And we get the 40,000 for easy math, 240. Well, I'm looking for over 200,000. What if we short on that 200 plus and we only go to 180? I think you'll be happy buying it at 50,000 and lower and it gets to 180. I mean, come on. But that's the plan. Halving is next April, May of next year, of 2028. And then we top out in fall of 2029. It's happened every time. 13, 17, 21, 25, 29. And when did we bottom? 14, 18, 22, 26. Get the math? Pretty exciting. Like, this stuff's hard to trade. It's so volatile. Well, not when you tame the beast. That's what we're here to do. We're taming the beast. We buy low, we sell high. We buy low, we sell high. We buy low, we sell high. And we do it every 4-year cycle. Pretty simple. And when's the buy? I don't care if Bitcoin goes tumbling and we hit 50,000 next week. I'm nibbling. We go lower than 50 toward 40, I'm buying more. We're going dipping into toes in the 30s, I'm buying a lot more. Amen? And there's many ways to play it now. You can buy the ETFs. You can buy Bitcoin straight up. Even old Charles Schwab just sent me one saying, you can sign up. We're going to be releasing you can buy crypto at very low rates, blah, blah, blah. So we got crypto.com. We got all kind of other ones already you can buy. But now your average brokers are allowing you to buy straight up crypto. How about that? So how? This will be going probably this year. And even old Charles Schwab will let you buy a little crypto. And when do we buy a little crypto? When we hit 50,000 and lower. And when do we sell crypto if we don't want to keep our eyes on the road every day? Because it's going to be a volatile swing in here. It always is. That's the beauty of it. But you harness the beast down low and then you sell the beast up high in 2029. That is the plan. And could we grind up and make all-time highs before we get to the halving? That only happened once, and that was that last cycle. We go to a 3-day. That was the last cycle because of all the ETFs, the FOMO, the fear of missing out. And what happened? We rallied and actually made a new high before the halving. That was unheard of because of all the ETFs. So, but boy, did we peg that. Remember, we talked to this is FOMO, man. This is FOMO. And it ran up like on cue. And no surprise, we got a correction after the halving. Beautiful. But that just set up the next run to our target. Yes, a little shy of it, but like I said, from 20 to 120 plus, steal of a deal. So what are we doing? 50 and lower, start nibbling, and where are we going? 200 and above. That's the plan. All right, so let's circle the wagons. What are we learning? Be careful with the markets. This insane chop and grind is going to come to a halt, but every time it dips, the bulls step in, and it seems like we dip and we go to the extension. We've done that. We went to the extension. We're struggling up at the newest extension, and I would not be surprised to see a little bit of a pullback. But what's coming is, remember that this thing at some point is going to make a huge retracement, at least a 618 type of retracement off of that, if not even bigger, make a lower low going into the fall. So remember those terms, fall into the fall. But could we still keep grinding a little higher because this is just the beginning of June? Yes. And does this little dip and retreat, retrace, extension continue longer? Kind of looking what it looks like, but be careful. Still think we got some more upside, yes, but we're going to kind of struggle a little bit. We do need a correction, especially when you go out to a daily and you look at this monster. This thing is ripped. Remember, it was weeks ago. Since 1950, we haven't seen anything like this. And we really hadn't got any type of retracement of substance yet. Not since this one. So that rip is what you call a parabolic move. And Harold, what do we know about silver and other parabolic moves? You get a 50% haircut. So even if we just do that, that's kind of where this daily magic fibbo is sitting. And you get the low, you get the high, and you get a 50% retracement. I'll run some new numbers on here because we keep running these. But even if I don't get my big fall in the fall and it's only a 50% haircut, my fall in the fall is a new swing point low. This initial move up and another correction bigger, that's the fall in the fall that I'm looking for. But in the short term, maybe we get like a 50% retracement. So again, I'm going to remove these just so you can see it. They're all on top of each other. But what are we looking for? We need a correction from that low up to the current high. That's kind of right in the zone where my 50% retracement magic fibbo is sitting. So when you get these parabolic moves and you don't get much of retracements along the way, you're going to get one of those. Is it possible we could do this over the next week or so and still bounce, go even higher, then still hit the fall in the fall? Yeah, we have time. This run up, once we made that lower low, talked about we would get a run up, a fall pullback, and then potentially stratospheric type of move. That's still in the cards, especially if we're lucky enough to get that retracement to come down here to this lower low. What? Lower low than this, lower low over here, and then bounce to set up potentially the stratospheric type of move. Amen? So be careful. We reached the target we wanted to. I was just smaller, more concerned. Remember what I said? We're definitely reaching this. That's a given. But do we reach this to get that fall pullback to like a weekly and then go stratospheric? I really don't see this thing continuing just to grind straight up here without any type of pullback. And I'm looking for that fall pullback. All right. So the same thing with NASDAQ. Still think we're going to grind and grunt, but we need a pullback. Do we get the fall pullback and do a combo 618, 786 combo bounce off the magic Fibbo to give us stratospheric moves into the 40,000 or even 45,000? Watch out. We need a correction. This thing has been on a run. And yes, every time it sells off, what happens? The bulls step in and it keeps grinding. So I do think there's more upside, but a correction is looming. And more importantly, one of these little dips that the bulls keep stepping in to keep grinding higher, we're going to get that fall pullback going into the fall. And nothing would make me happier to see that low, that high, get a 618, 786 combo bounce to then go into next year, pushing into Santa Claus rally and potentially even going to 45,000. So we'll keep an eye on this, especially if we get that weekly style retracement going into the fall. That sets up potential for pushing into the 40s. Wow. That would be very impressive, to say the least. All right. So there you have it. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.